Good evening, folks, and welcome back. It's Robert Vaughn, Alex Jewell, once again, the DeFi Collective. Our email is deficollective@gmail.com, and we cover all things that happen to do with decentralized finance. We talk about crypto. We're going to talk about Web3 a little bit today, and then talk about the crypto markets. I'm sure you'll find this show very interesting. So why don't we just kick it off? Alex, what the hell is Web3? You know, I'm hearing Web 1, Web 2, Web 3.
Yeah, these are relatively recent terms to
Okay.
try to describe the chapters of the internet, right?
Okay.
A lot of people consider Web 1 to be read-only, as might have been Web 1, you kind of go to AOL.com and see some information or go to some random forum and, before people could contribute to it, and there's just information, right? Is we read-only.
Okay.
Web 2 really created this interactivity, right? It created this huge data economy eventually, where people could actually engage and create, and that became a huge opportunity for big tech, right? This is really where big tech excelled and grew because they suddenly had the data standard, right? They were able to monetize the internet.
Okay.
Now, what Web3 is about is ownership of that. So while Web 2 might have been creation, Web 3 is more about collaboration. It's about us owning the internet we use. It's more of a horizontal expansion of the internet as opposed to just some vertical expansion where a bunch of companies got super rich. It's more about the people owning the internet. And that's really simply high level. The difference between Web 2 and Web 3 is that Web 3 is a decentralized internet that we all collectively own and contribute to and democratically participate in.
Okay. I got a couple of definitions because and the reason we're talking about this is because we had some inquiries. 3 people asked, can you clear this Web3 thing for us? We want to understand what exactly is Web3. So here's one definition of Web3 in the context of Ethereum. And Ethereum is a platform on which a lot of these smart contracts operate, and that are written on a platform called Ethereum. It's a platform, a blockchain platform, but it just happens to be Ethereum. It refers to decentralized apps that run off the blockchain. These apps allow anyone to participate without monetizing their personal data. Now, which is sort of interesting because one of the things that decentralized affords you is to the retention of your personal data, because your personal data is taken, it's monetized, and it's sold. That's what Facebook and Google and all the platforms do. And Web3 allows you to participate, financially or in other ways, and without giving up your data. Another definition: Web3 is an idea for a new iteration of the World Wide Web based on the blockchain, which incorporates concepts including decentralization and token-based economics. And I know Alex had mentioned earlier that Web3 is the internet side of decentralization, and crypto is sort of the economic side.
Right.
So you have, and give us a couple examples, Alex. I mean, for instance, the metaverse, that's Web3.
Yeah, and even the metaverse is kind of an obscure concept, right, of a virtual side of the internet.
Virtual reality is what it is.
Yeah, it's essentially virtual reality, but it's, the metaverse is not owned by Facebook, however much they want to brand it. The metaverse is this decentralized virtual reality where blockchain and crypto are sort of creating the means of exchange and ownership of digital assets within that virtual economy and virtual world, right? And that is not on one platform or in one place. It's decentralized. It's across a lot of places, owned by a lot of people. And that's sort of the beauty of that, right? Is that it's not owned by big tech. So, really, like when we talk about crypto sort of being the basis for the new economy and decentralization, blockchain is also helping us create a Web3, which is that decentralized internet side of that economy. We obviously know that the internet is a huge part of our current economy. that a lot of our communication around business, a lot of our exchange happens digitally through internet protocols. That's not going to change. Essentially, blockchain works because of the internet, because of internet protocols. But the difference here is that we would own the means of production. We would own the exchange itself. We would own the platforms that carry out those exchanges. And so an example might be NFTs, right? So you have an artist on one side, you have somebody who wants their art on the other side, or a mortgage. Let's say you have a seller on one side and a buyer on the other side, and it's going to carry out over the internet. Web3 is the ability to do that, to have that relationship. And crypto is the economic portion of that allows the creation of those tokens that get exchanged in the process.
Right.
So that's really, hopefully that kind of encompasses how kind of broadly the relationship between those terms that are a little bit vague usually.
Yeah. And I think, Web3, it's sort of a different concept to wrap your head around, because we think when we talk about economics, we think in terms of capitalism,
right?
Where you have somebody that, I own my own house, or that's my car, I own that car, you get the same utility if you just borrowed it or rented it. But,
Right.
We think in terms of owning something, somebody owning something. Well, the metaverse is not owned by anybody. Not that some companies are trying to own it. And I mean, we'll have to see how this plays out, but I talked to a gentleman the other day. He said, yeah, I just went on my first date in the metaverse. I'm like, dude, you've been, you got to get out more,
He did.
He did a virtual reality date. He met somebody and they went to a bar.
Yeah.
I'm like, okay, it's virtual reality. And I guess maybe you could arrange to meet the person in person or something. I don't know, but it would just sounded kind of weird, It's like,
People are going to concerts in the metaverse. They're you've got
I can see a
shops.
concert experience, but I guess a dating experience, maybe he had some lines he wanted to practice or something. I don't know. Yeah. So that's part of what Web3 is. So metaverse is part of Web3, and there's a economic side to it also, because there is property being bought and sold in the metaverse. You have non-fungible tokens, NFTs. I'm sure everybody's heard about those now. That are things that exist in the metaverse.
Right.
And that's also that's the economic side of Web3.
Mm-hmm.
So, when somebody says Web3, it's the next iteration of the universe.
Right.
And one thing, the metaverse, before the show, Alex and I were talking about how mathematics is changing, how calculus and differential equations are still basically the same, but the way you kind of manipulate the values now is a little different than it was when I took calculus.
Yeah.
And if you can think of the metaverse as sort of a three-dimensional entity, where mathematics and it's done on paper, it's done in usually 2 dimensions, on paper. But if you can imagine a metaverse, what's done in 3 dimensions too, like solid geometry, for instance, but if you can think of the metaverse as, I see the metaverse affecting mathematics eventually.
Yeah, you've got people teaching in the metaverse. You've got people, the reality is that like the experiences that we have,
Mm-hmm.
A lot of older generations will think about those experiences in terms of like how cold something felt against their skin, or how warm or soft something felt, or how something melted in their mouth, right? These are things that are like, we're not going to necessarily replace anytime soon. But the reality is that a lot of people experience the meaning of things, especially things that maybe don't need to be as tangible. They experience those things in digital ways, in like even more meaningful ways, possibly, right? And that's hard for people to accept, but it's true. When you're fully immersed, and there's actually a little bit more there's a ton more freedom in terms of how that experience can carry out, because it doesn't have physical limitations. So it's actually more interesting in terms of like, well, I don't have physical limitations of a whiteboard or a chalkboard that I only have dimensions of that I have to constantly wipe down, or right. There's like all sorts of limitations to the physical world that don't exist in virtual worlds that actually facilitate really interesting human experiences that are very meaningful. So that's an interesting thing to think about.
Yeah, it is. It is. And, we talk about, I belong to this math club on Facebook. They talk about, different problems, and can you solve this problem? Can you solve? So it's just like something to pass the time, like solving puzzles or something. And this one guy had said that, for instance, somebody mentioned how would the metaverse be different? He said, well, for instance, with the metaverse, you remember calculus, your limit of 0 to infinity for f2y of x or something, And he said, well, imagine, if that didn't just go, if that could go in every direction. And he said, that's what the metaverse can do.
Right.
So it would not just be on x, y, it would be x, y, z, and then z minus. And you could do a calculation in many different, in all directions. And I said, well, I could kind of see how that could be useful,
Yeah.
And he said, yeah, it's a lot of ways that it could be useful, but that's just one area I think where the metaverse is going to really have an impact and on technology.
Mm-hmm.
In technology, man, suppose you could, construct an AI platform that kind of, like a neural network went in all different directions.
Yeah.
But
Well,
there were no
this has
limits.
happened a lot with industry and with technology.
Right.
We reach certain physical limitations and then it resets itself, right? This happened with the first industrial revolution. We reached physical limitations where factories were getting too large and hot and powerful, and they were causing fires and people were dying and they're destroying waterways. And what happened? We had another digital revolution that changed the art of production. And then, you had the onset of things later on, like automation that changed it again, and the internet that changed it again. And so you have all of these things that continually come in and reset to adjust to the physical limitations, so that what's known as Moore's law, the idea that technology will exponentially grow in terms of time and speed. And so technology will exponentially grow, but we have physical limitations that challenge that. And every single time that Moore's law gets challenged by physical limitations, whether it be, space or energy or things like that, we have some sort of reset where somebody solves the problem, or a group of people solve the problem, and it starts over again. And this is something that no matter how much people, classicists, want to stand in the way of it and say, well, no, like we can't let this happen. Well, it's going to happen. So what we have to do is figure out how can we own it? How can we make sure it's equitable and accessible and creates an even better experience in reality for the people who are going to be around for these changes, right? And that's ultimately what we have to do. We can't stop progress. We can't stop technological innovation. We can't stop people from being in the metaverse. So how can we make the metaverse the best place we can?
Right. And what's, speaking in a broad sense, what has been limiting moving forward in a lot of areas, just in society, politics, or whatever, is a lot of research is always driven by how to make money.
Right.
It's not driven. See, that's one of the problems with the capitalism model. Is things are driven by how you can make money or how you can do it cheaper, not necessarily how you can make a better environment for the people.
Right.
Or all these people are going to be displaced. What kind of jobs or usefulness can they do to, maybe family farms is a good idea.
Right. And the goal is to make more money with less employees at cheaper costs.
Yeah. Yeah.
Which is not in favor of the worker, right? Or the consumer.
Well, it's not sustainable, because what's happening now, you've had, during the pandemic, I guess the billionaires double their wealth. And then a lot of other people don't have anything to eat and don't have any jobs.
Right.
So what's happening is, you're concentrating wealth in such a way that pretty soon, Tesla, most people can't afford to buy a Tesla car.
Right.
That's why they lease them. Nobody, most people cannot afford to spend 80, 90, 100, 120 grand on a car.
Right.
No, a lot of people can. I read the other day the average price of a car, a new car now is 41 grand. I mean, that my first house was like about that much.
Yeah.
It was like a 3-bedroom, 2,200 square foot house.
And minimum wage hasn't changed that much
Colonial.
since you were
Yeah,
since you bought that house.
So, I think what's happening is that, the lot of wealth has been concentrated. There's no more middle class. It's not the size that it used to be. And there's all this downward pressure on wages because if you got 10,000 employees, the easiest way to make some money is to cut everybody's wage by a dollar an hour, and you make $240,000 more a day every month.
Or cut 20% of the employees.
Okay. And cut 20% of the employees. And this is what they've done now. And they're like, well, why don't people go back to work? Well, first, they say, well, it's because unemployment, you're giving them too much money. Well, that didn't pan out because when they stopped it, people still, well, I think what it is sort of it's like a strike. It's like a general strike.
Yeah.
It's like a decentralized general strike. Here you go for decentralization. And people just are saying, this is crazy. I can't afford to live on these wages. I can make more doing DoorDash.
It's worker sentiment, right?
Yes,
I mean, it's not even it's not organized per se, right?
Not.
There's organized fractions, but the reality is that it's just people completely discontent with the realities of the capitalistic market.
Right.
Their workers aren't the focus of the market. That companies don't care about the happiness of the workers. Companies care about getting less workers for more work. So, I mean, it's
they don't really refer to them as workers. If you're, they refer to workers as a burden rate.
Yep.
A burden, how much that person is costing you compared to how much they make. And, you should be able to, if you're making $20 an hour, you should be able to produce about $100 an hour.
Right.
You produce a minimum 5 times of what you're making. And, you get 20% and they get 80%, or
so
whatever.
why make that large of a percentage for somebody else, right? I mean,
right.
It's just basic math. And
That is. And so I think that's why a lot of people, you see everybody's saying we can't get enough people. I saw a sign the other day on a store and it said, we're hiring on the spot, no interview required, and we will provide transportation to and from work. I'm like, they need people in the worst way. You know what I'm saying? They need people in the worst way. But, people have been, I guess, undervalued for so long.
Right.
This has been a process that's been going on for about 50 years. I think it accelerated when Reagan decertified traffic controllers union, PATCO.
Right.
And then it was like open season on unions. And, I think it's come to a head and people are saying, we're not going to go, work in a factory for $12 an hour when I can make $20 an hour dropping off lunches to people.
Yep.
Or I can do 25 or $30 an hour driving Uber and just hanging out at the airport all day and driving around the airport. So I think, if for companies to really attract workers, they're going to have to make the employment more attractive. They're going to have to, it's not just money. It's just, I can remember I worked at a place, I won't call it that, but I worked at a place for about 11 years. I did a lot, got 4 promotions while I was there. I did a lot. And it was time for me to move on. And when I left, not one person said, hey, you did a good job. I was thinking on the way out the door, I said, one person would stop me now and say, hey, we think you did a good job. We appreciate what you did. I probably would have turned around and went back. But I was
like, really? You noticed?
Yeah. It's like, okay, you're quitting. So you're out. You're the enemy now. And, we don't, the burden rate and, we got your replacement. And that's the way I think employment has become. It's not, it's you're worth what you can make for the company. And it doesn't matter if you're there, I'm there, or anybody's there. Right. And I think what's happening now, is because of that, shift in the wealth transfer. Mm-hmm. The people in the middle class can't afford to buy what Tesla's manufacturing.
Right. Well, the middle class is pretty much disappearing to begin with.
That's
I mean,
disappearing. Yeah,
you
yeah.
know, and that's, I don't think we're going to get to a place where we're going to have anywhere near the working the traditional working economy the way that it used to look.
Mhm.
I think the reality is that we're in this awkward position in between full automation and the digital economy getting kickstarted. And so you have these options where people are able to leave the traditional economy, where they had to work for low wages in unfair conditions, against their own interests, and they're able to work to their own interests in the emerging economy. And so the reality is that we aren't fully automated to the point where the economy can easily sustain that kind of loss.
The
So we're in this
transition.
awkward position where companies are doing whatever they can do to try to retain people in those uncomfortable positions they aren't incentivized to stick around in. And it's going to be interesting to see how that plays out, because it's not in sync. The stuff doesn't really happen by design, right? It's part of much broader macroeconomic trends. And when you add in so many layers of technological advancements in the mix and cultural advancements in the mix in terms of how people think about digital work and how they think about those opportunities and where those opportunities present themselves and what the barrier of entry is to those opportunities. And there's a lot of macro trends here that don't necessarily, it's not like they had like a meeting of the macroeconomic trends and all of them were like, yeah, we've got the same plan. No, it's like this stuff just sort of happens. And throughout history, you've had really awkward moments in between where things feel out of sync because one thing's sort of ahead of another thing, and society has to try to adjust to meet up, catch up to it. So, I mean, you saw this in, certain after the Black Plague or something, that a situation where workers just decided to not work because there was only a few people left on the planet. And they're like, we don't have to work anymore.
Yeah.
There's only 10 of us here in this town.
Yeah.
We lost 1,000 people and there's only 10 of us left. You're going to have to pay us more. And so you saw this huge hike, and suddenly, this was feudalistic time. It was a feudalistic time period. Most people didn't own anything. There was the aristocracy and everybody else. And what happened is they actually had to make it illegal. They had to put a cap on how much they were able to pay them and force them to get a job, and then criminalize them if they didn't get a job. And so you had this you have these moments throughout history where people end up more valuable than the economy wants them to be. And the people in power try to figure out what to do about it, because they're like, oh my God, they're not just going to go along with it right now. And so we'll see how that plays out. But things like Web3 are a part of this digital revolution where where there's tons of new economic opportunities for people in a very new and emergent, exciting set of ways, where people can be creators and people can be simply participants in economies and earn, money and crypto to live off of, simply for being somebody who's involved, right? By selling fake coffees in the metaverse, or buying land in the metaverse that happens to be next to Snoop Dogg and goes up in value, right?
And see, you know what it is? It's all speculation. It's sort
a lot
of
of it's speculation, of course,
of the stock market too. A lot of it is,
a lot of it's speculative at this point. And people are able to make a living with speculative stuff, but people have to be also very careful with speculative stuff as well, because fundamentals still apply, right? What makes something valuable over the next 10 years, even when the bubble of that speculation bursts and what we're left with is just a utility. We'll see. We'll have to see if things like Bored Apes and land next to Snoop Dogg are still worth what people think they're worth right now.
Right. Or $1 for that matter. I know there's been the last couple of years, a lot of the athletes have been getting their bonuses in Bitcoin.
Yep.
And one of the quarterbacks, Trevor Lawrence, made out real good. I guess he got his when Bitcoin was low. It was like under 30,000, I believe, or low 30s. And I'm sure he probably, when it hit 60, he probably dumped it, And then Odell Beckham, he got his when it was high at 60, and now it's 30, but he had to pay tax on what it was when he got it. So right. This, according to the report, he's got $750,000 he had to pay tax on, Now that the price is half, by the time he pays tax, he's only like playing for like $40,000 bonus. You know, think about it.
Right. Well,
But
the New York mayor just got paid. He just got paid for the first time in crypto, and then the market the very next
Hank,
day.
so I guess, moving, this might be a good segue to talk about cryptocurrency. And I
Yeah.
think, I would just say, as with anything, you want to kind of understand what you're doing. And crypto is an economic entity, although it's different than fiat currency. There's still certain laws that govern it. Like who was that? What goes up must come down, or something. And spinning wheels got to go around. Well, that's the way the economy, and that's the way stocks are. Something doesn't usually go up and keep going up. Now, Bitcoin has done that. I think previous to, and we don't know what this year's going to bring, but the last 4 or 5 years, I think Bitcoin has gone up, 200% every year.
Yeah.
Yeah. So, I mean, it could still do that. It could still finish off the year at 120,000. We don't know, but I think, you want to kind of understand the entity too, because a lot of people don't like Bitcoin. A lot of people, a lot of countries, China outlawed Bitcoin mining, because they want to use the Chinese currency. Here again, you have decentralized finance butting heads, with centralized finance, where there's some entity at the top, whether it be a bank or a government, that wants to kind of control it. And by its very nature, you can't really control the market, I think, in cryptocurrency. Would you agree with that, Alex?
Yeah, and this is a real threat. Our company today, we were doing a customer demo, and nation state security came up. Nation state security is extremely important for us as a crypto company, because as a crypto company, we get attacked by any variety of nation states around the world who don't like what crypto companies are providing, right? That inherently threatens their position in terms of a old economy that they help design, that they benefit from. And so the reality is, right now, there's obviously been a huge fluctuation in price. There's been a lot of downward pressure. And I just want to, first of all, emphasize that this is happening not at any fault of the technology itself, right? This is not happening because people are losing trust in what Bitcoin accomplishes. They're not losing trust in what cryptocurrency is or why it's valuable. There's not some new finding that somebody unveiled that shows that it's a bad thing. What's happening is by no fault at all of the technology itself. What's happening is that we have a lot of external forces that are creating downward pressure on things like crypto, and it really has nothing to do with crypto. You have obviously the Fed right now. I think literally an hour ago, there was more updates, but Powell sort of made sure that he got to keep his position this year before dropping the bombshell that he was actually going to raise interest rates and wean the market off of the Fed, because the Fed has essentially been artificially propping up the market over the course of COVID
and the economy.
And the entire economy, because they didn't want to see, a bloody massacre as a result of what, the uncertainty COVID brought. So what they started doing is buying junk bonds and maintaining low interest rates. And this looked nice in terms of how the rich people profited off of it, because of course, a lot of people judge how successful an economy is by how well the rich are doing, instead of looking at how the poor are doing. But the reality is that when you create possible hyperinflation, it's the poor who are going to have to stand in line with a cart full of pennies to buy bread, right? So the reality is that, now that he's been able to keep his position, he's doing the right thing that he should have done earlier. And he's going to slowly over the course of this year correct that mess, because we've seen hyperinflation that's created inflation rates of, anywhere from 6 to 12%, depending on who you ask. And really their target is about 2%.
Right.
Now, what happens though as a result is that you see a huge sell-off within the market, and you see the market deplete because a lot of what was in the market keeping it up was artificial, and that's going away. And so when you see that go away, you see sort of some sell-off as people like pull back, they recalibrate, they readjust the reality that the market's going to have to be real again. And
There's
as
going to be
real
a
as it can be.
readjustment. I think there'll be a readjustment with Tesla too eventually.
Oh yeah, all these. I mean, well, you see huge issues with Tesla coming because the Tesla truck was an absolute failure.
Mhm.
He was trying to push the semi trucks. Every
And
other
folks,
project.
they haven't made any money yet.
No, they haven't made any money yet.
They haven't been profitable as of today.
Yeah. So the reality is that like a lot of the things that were creating that PE ratio don't work, right? So
Right.
we'll see. But overall, the market's going to see more correction over the course of this year because they're going to keep raising interest rates. And it's going to be slow, but that means it's going to be a bit painful as those things
And
happen.
it's gonna. I think with the market close today with around 33,000. I think that's kind of high. That's pretty high. But see, when crypto was at 70, 71, people were still buying it. But guess what? Now it is down to what, 37 or 36. And if you look at it, you say, well, it's in the tank, so I'm sure people are selling. Well, the activity is 78% of people are buying it.
Right. What's happening?
That's a buying opportunity when a stock
Right.
goes. When Amazon in 2020, when Amazon tanked about 70 or 80%, that was the time to buy it, man. Because a
Right.
month later, you would have tripled your money.
Yep.
And I think the same with crypto. People say, I was talking to a gentleman today. He said, "Oh man," he says, "I don't know whether to ride this through or just dump get out of crypto." I said, "Man," just like stocks, man. Investing is a long-term thing.
Right.
If you're a speculator, you're not an investor. So you have to decide if you're going to be a speculator or an investor.
Not an emotional thing, right?
Yeah, it's not an emotional thing. Yeah.
Without giving financial advice, what really people have to understand is that if you sell right now, you're just providing liquidity to the institutions that are buying it. And the reason the institutions are buying it is because they are getting into it because they know it's important. So
and they know it's going back up.
There's still huge funding rounds every day happening in crypto. Institutions are buying billions of dollars of it every day in crypto. And it's because the market effects, like I said, have nothing to do with crypto. These are normal things that are happening because of external forces,
Right.
like what the Fed is doing, like the possible war that's brewing. These things create market uncertainty, newer emerging assets, more speculative assets like crypto take a panic retail brunt of those uncertain forces, right? Smaller hedge funds, normal retail investors, people will panic. That creates a self-fulfilling prophecy. If you see price going down more, people panicking. But what you see on the, as a result of that are the people who aren't reacting emotionally, taking advantage of that situation to buy more. And the reason they're buying more is because, like I said, these downward pressures have nothing to do with the technology itself. We know the technology itself is here to stay for a very long time, that it's the bread and butter of the new economy and the new internet, like we talk about. And so because of that, there's no reason to be worried about the technology or the technology's valuation within the broader economy. One Bitcoin is still equal to one Bitcoin. As long as one Bitcoin is still equal to one Bitcoin, everybody's okay. We're doing good. That when you understand the economics of the asset itself and worry less about its US dollar pair, when the US dollar itself is going to undergo huge transformations over the next 5 to 10 years, then staring at charts and trying to predict the future and worrying about the short term, that's up to you, but I wouldn't suggest it, right? That's not going to be a comfortable, enjoyable time.
Now, just to reinforce what Alex said, I just did a little looked up. January 31st of 2020, the price of Bitcoin was $9,300. So it's pretty cheap. January 1st of 2021, the price was 58 grand. It eventually went up to about 71 and it's back down. So like you say, you have these big hills and valleys,
Mhm.
but the trend line is definitely going up, because I think, January is not over yet. So we could see a move, an upward move, this last week or so. And each year it's going to be a little higher than it was the year before. And I think Bitcoin really took off in January. I think January of 2021 it started real low and it went up. Then it go up
January
like
naturally has
crazy.
pullback, even without these other external downward
Yeah,
pressures.
yeah,
So
yeah, yeah. But because there's an old saying in the stock market says, well, if a lot of people believe so goes January, so goes the year. So that's why, everybody in the stock market is hoping for a good January, because the year usually does a lot of times reflect what the market does in January. Not all the time, but more times than not. So, yeah. Now, other currencies, I think there's been a lot of pressure on cryptocurrency from institutions.
mhm.
And it's almost like, they say, well, don't buy it. It's just is junk. Don't waste your money on it. Don't buy it. But yet still they're buying it.
Oh yeah, yeah, yeah. They're definitely. It's why I have I mean, our company
That's what your company
exists
does. So,
because institutions are buying it and need a place to store it. So
yeah. So institutions are buying it, like, and if they're buying it now where it is, that's a much better deal than if they'd have bought it a month ago when it was a lot higher.
right.
So I think you can't really look at cryptocurrency and say, well, it's dead, or it's volatile, just like all instruments are volatile. All securities are volatile. Stocks can be very volatile too. I mean, like in
It's new.
2020. Yeah,
Things
yeah.
that people don't understand that have bubble. There are bubbles in crypto, right?
Mhm.
This creates volatility because a lot of people won't see through the bubble to see the underlying technology.
Mhm.
And that's why we literally had a dot-com boom and
Mhm.
burst, even though we obviously got web 2 out of that. We got the internet that revolutionized a lot of our lives, right?
Mhm.
I've had a whole career because of that dot-com bubble, not because of the destruction of the bubble bursting, but because
But the
of what was left,
technology, yeah,
right? What
the
was left
technology.
when that bubble burst is
Uh-huh.
why I have a career, right? And so our whole lives changed with that. And so the reality is that you can't use critique or confusion over the non-fundamental stuff, the pumpamental stuff, the
Mhm.
scams. Those things aren't reflections of what the technology itself accomplishes, right? Those are people misusing it or misunderstanding it or taking advantage of the hype. And those aren't even a small percentage of the broader advancements that are occurring in the research and from academia to institutional level. There's a lot of actual research and development changing how we think about a lot of parts of our economy and our technology. And those are the interesting things, but those aren't the things, unfortunately, that you read like quick headlines about, or, the headlines are more like Bitcoin crashes, will it survive? And people are like, oh no, and it's like that scene from Titanic, where the boat's just like, and people are screaming and flying off the boat. And like, that's what, you can't base it off. And if you want to be on the cusp of what is to come over the next 5 to 10 years,
Yeah, and
do
and
work.
it's
It's because it's there.
I think many people aren't sure if that's the direction we're going in. But if you look at the trends, that's how you can tell the directions from trends, not what it's doing right now. But look back where we were 6 months ago, a year ago, 18 months ago. Look back in 6 month increments for the last 10 years, and you can see a pretty definite trend.
Mhm.
Not just a trend in terms of the price, but a trend in terms of the market penetration of who owns Bitcoin, who's involved in the markets. You know,
Yeah.
everybody, not everybody, but a lot of people, all your institutions, are involved. So, the trend is definitely that this is something that's here to stay. And I read I either watched a program or read something that said economic systems take anywhere from 10 to 150 years to completely change. But it goes
Yep.
back to what you were saying. This is
Right.
not something that's going to happen next week. You know,
Right.
it could take 10, 20, 30 years. But I think you see that it's starting to turn around, you know.
Yeah.
I mean, it took a while, you know, after the French Revolution, when capitalism, laissez-faire capitalism was declared the, you know, the economic system of the 21st century or 20th century, you know, it took a while before everybody got on board. You know,
Yeah.
certain countries said, oh no, communism's the way and capitalism's not the way. But all the countries now, whether they're, you know, communist or socialist, the USSR, whatever, they're all capitalists now. You know, that's a predominant economic system in the world, is capitalism.
Right.
And I think it has some, you know, it has some flaws, because everybody has not participated at the same level, and that's creating some social pressures to remedy, you know, the transfer of wealth.
Right.
You know, every time you have a war, man, it's about money and resources. You know,
Yeah.
over the last 100 years, they've all been about oil. You know, every war has been about oil. You know, and you know, I think, you know, with the resources becoming scarce, and with people not being able to participate in the economy the way they could 50 years ago or 60 years ago, I think there's going to be a lot of pressure to maybe move in a different direction, you know, maybe have some sort of a hybrid system or a capitalism that can coexist with decentralized finance. And I think that's kind of like what we're seeing now. You know,
Right.
anytime, and I think the banks and the, you know, the hedge funds and all the institutional investors are trying to figure out how they do this hybrid system. And I think that's kind of what's driving not just the stock market, but that's what's driving the crypto markets also.
Yeah. When you zoom out, you see different chapters, right? And I've been through a lot of them. I got into crypto probably 2013 or 2014. And so at that point, Bitcoin was 300, $400. At one point in 2013, it like went up to $1,000, and I was like, oh wow, like this is wild. And I really got into Ethereum when it came out in 2014 or so, and I was just like sold, because then I hit smart contracts. And so, but we had these dark chapter when you zoom out and you see sort of like this like kind of like this quiet time at 2013, it goes like this, and then it goes back down and maybe even hit $200 at some point in between 2013 and 2016. So you had these 3 years in the middle of that one where it was pretty dark, but it was dark price wise. In terms of like the community growing every day, I was meeting new people or seeing new projects that people were working on, seeing how people were thinking differently. 2014, Ethereum hit and our minds were blown. 2015, going into 2016, people were ramping up. Ethereum was really showing the power of smart contracts. And so all of a sudden you see that even Bitcoin do this like crazy thing up into 2017. And that was the ICO boom. And even then that was a bubble, because you had people getting rounds of funding to the tunes of millions and millions of dollars just for having a white paper. Like they didn't have a token minted. They didn't have a
Speculators,
platform.
speculators.
They
That was the
didn't have a
speculators
line
and the
of
gamblers.
code. I remember white papers I worked on. There wasn't a line of code involved. It was just a white paper. And there was just investors throwing millions at it because they were like, one of these has to be the next Ethereum, right? And some of those got lucky, right? Now you have all the Ethereum killers that came out of that time period, essentially into 2018. But what happened after 2017 burst, you see this line again where things go down. It's quiet for a few years, you know, and so what, it was pretty quiet up until 2020, honestly. From, you know, you had a little bit of a, you know, 2019, it kind of went up a little bit, but it was very quiet in between 2017 and 2020. And so you had another 3 years in between where it was just people moving into the next chapter. And what that next chapter people started moving into was interoperability. It was these high, more private chains started emerging. You had things like Ripple, that's something where, Ripple's been around a long time, but Ripple started making those institutional plays, got targeted by the SEC. You had, all these other Ethereum killers pop up that were in deep development during these years. And now 2020 hits, and all of a sudden every bank's buying it, every government's thinking about it. Royal families are moving huge previously oil funds into crypto, right? And so every few years, you see these huge amounts of growth that occur. And in between, you have a couple years or 3 years where it's just like the dedicated people who are like, I still believe in this technology. And it's just people buckling down and preparing for that next chapter of like, how does this actually break? Because it's a long period of time. It's not just like a quick thing where all of a sudden overnight crypto is the standard for the whole world. These are slow transitions as like pieces of the economy and our technology and people's lives. I mean, these are things that have been cemented for a century, right? And so, moving them over to something else is a slow process. And you're going to have periods of time in between that feel like a long time when it's 2 or 3 years. But in the grand scheme of things, it's not that long. It's still pretty fast.
And it's all relative too. When, back in the mid to 2013, 2014, Bitcoin was $200-300. And you look at it now, it's 37,000. And we say, wow, 37,000, that's great. But it's all relative.
Right.
Suppose, there may become a time when a Bitcoin might be worth $10 million for one Bitcoin.
Right.
The 37,000 looks like a pretty good deal.
Yeah. Right.
And it's all, like you say, it's all relative to where we are now, to where we could be. And I think if just, I did like a rough calculation, I think if just 10% of institutional money came into Bitcoin, each coin would be worth like $4 million or something. I mean, some ridiculous number. If people feel comfortable enough that they start moving money from the market, institutional investments and bonds into Bitcoin, it could be $5 or $10 million.
Yeah.
For one coin, and then you would say, "Oh man, I bought this when it was $50,000."
Right.
And people told me I was crazy, and
Right.
and it could very well be worth 20, 25, 100 times what it's worth today.
Yeah.
And that's not such a far-fetched idea, because Bitcoin is more of a storage of wealth. It's a place to keep your money safe. It's like what it is. It's like a Manhattan apartment in Tribeca. It's a place you can spend $40 million on an apartment or whatever, and your money's safe. That's why real estate in certain parts of the country is so expensive, because people from all over the world know it's a safe place to put your money.
Right. And those chapters were lonely, right? There wasn't any Jimmy Kimmel episodes on NFTs during those times. I'll tell you that. They were very lonely, where people were like, "You still playing around with those magical internet dollars?" And it's like, yeah, because I was like, "You guys need to see the power of this." And they're like, "That's stupid." And then those same people this year would DM me like, "Hey,
can you loan me
not that
20
crypto
bucks?
advice I
Can
didn't
you loan me
want."
20 bucks?
And the reality is like, is any time is okay to get in, as long as you're not banking your rent on it, right? If you're either going to throw assets into a savings account that's going to give you 0.1% APY, or you're going to put it into an asset that grows every year and that outperforms everything else, even when it's not doing super hot right now, I can't make that decision for you, but don't pick the emotional decision. Understand what it does, understand why it's important. We try to give you those tools and the terms to look up and where to start and understanding what it does and why it's important, and make those decisions for yourself. Because the reality is that a lot of those financial instruments that people had 20 years ago that people are still trying to use and rely on, you're losing money sitting in those. I mean, it's just the reality, and they're not designed well for you. They're not really designed for you at all. So,
Right. Yeah.
that's why we have this podcast to talk about,
Mhm.
to help you understand it's not just about the graphs, right? At the end of the day, it's about what does the technology actually do for you, and that's why Web3 is going to be more important, is because what it actually does for you and your online experience and how you own your data and how you exchange and interact with the world, the digital world. It's going to be really important to understand that.
Right. Right. And it's another interesting fact that I found out is that and maybe I should have known this a long time ago, but people who are wealthy, they never use their own money. They always borrow money from an LLC that they have to do things with, because when you borrow money, it's not income, so you don't have to pay tax on it. You have to pay it back, but you have to pay interest back. And if you borrow from your own LLC, you're paying interest back to yourself, which is pretty, I don't know why it took me so long to figure that out, but I knew a gentleman who was pretty wealthy in the music business, and anytime he did something, he would always say, never use your own money. And he would always have these lines of credit, and whenever he did something, he would borrow money. I'd go in my bank account and put money, he'd borrow money, and he'd pay himself back or his LLC or whatever. And, and he never had to pay tax on money that we used to make money with that created income.
Right.
I was like, oh, okay, that's pretty clever.
Yeah.
So I think, with Bitcoin, with cryptocurrency, one of the nice things about cryptocurrency is that you can stake it, and get interest on loaning it to an institution or someone that it can be loaned out,
Mhm.
so you can stake it and you can make money from staking it. You can get some pretty, you can get 20, 30, 40% interest a year just staking it if you just got it sitting there.
Right.
And so that kind of reminded me of, using someone else's money or using your own money, borrow from yourself, if you want to do something.
Yeah. Put your money to work for you. Right.
Yeah, put your money to work for you. Yeah. But with decentralized finance, you have to kind of like reprogram your brain to think about money in a different way.
Right.
We always, we learn, money is utility, which it is utility, but the way it's manipulated and handled, you have to sort of think about it in a different way, than we did before. It was always, get a job, make $100,000 a year, save your money, pay for your house in 20 years, and get your kids through school or whatever, and then live happily ever after.
Right.
Well, now,
Yeah.
it's a little, those jobs aren't as plentiful as they used to be, and the way, economics and finance is happening now is much different than it used to be.
Yeah.
Anytime you have institutions getting into cryptocurrency, that should tell you something right there.
Yeah.
That should tell you that this is, somebody feels like this is the direction we're going in. When you have, Saudi Arabian billionaires, saying we kind of know oil's going to go away one day, so we're getting into crypto a little bit now, and we're going to get into some other things. But that should tell you right there, that this is here to stay. And I know a lot of people, I think, for lack of really understanding it, are reluctant to kind of accept it. You know what I'm saying?
You're sort of like, I don't know. We'll
man,
see what happens.
Yeah.
It's interesting, but I don't know. Yeah.
Yeah, it's interesting. Yeah. But currency, we have, and on this world we have different central banks, in Chinese, the Bank of Japan, the Bank of England, Bank of France. We have all these different, the Fed, we have all these different central banks that have currency that is worth what they say it's worth.
Yeah.
We're just fortunate here because a lot of the world currency is based on the dollar.
Yeah.
A dollar equals so many pounds, a dollar equals so many euros, a dollar equals so many Russian, what is it, rupees now, or ruble? That's Indian. What is it? Yeah, rubles. Yeah.
Yeah.
And I think we've just been fortunate that, our dollar has become sort of the main currency in the world. And that may not last.
Yeah.
So
And
what do
when
you
we
do
have
with
a
your
more
money?
global economy, it shouldn't, otherwise you're
Yeah,
perpetuating colonialized ideas
yeah,
of
yeah, yeah.
who's more powerful anyway, which isn't necessary or useful for
Yeah.
us understanding a more global economy.
That's right. Yeah, we've been kind of propping it up, and crypto, does cryptocurrency does a blockchain. It reverses the flow of ownership. You get to take ownership of your finances more so than if you go to the bank and you put your money in a bank, you get 1% interest a year. With crypto right now, you can stake your Bitcoin and probably get 20, 30, 40% a year in some places. And I wouldn't say it's any more of a riskier bet than a bank.
I would say it's less risky.
I
That's my
think say
personal
it's
opinion,
less
but I think it's
exactly.
less risky than a bank. I
Right.
mean, you hear bank hacks
Mhm.
every week. There's like a new bank that's been compromised, where your information's been compromised, where the bank is paying fines for criminal activity. I mean, it's just
And the actual money that's on the books isn't what they have in the vaults.
right. Good luck if there's actually some sort of other,
Yeah.
2008. Look at how many people's entire livelihoods were wiped out in 2008. They're never going to get that back. And that was all central banking. I mean, people are like, I don't trust this Bitcoin thing, but one little housing bubble burst and wiped out generations of wealth.
Yeah,
So,
yeah.
and
And that was
they
yeah,
designed it. It was their fault.
that was the fault. Yeah. Well,
So,
that was designed, planned. It was a planned action. It wasn't just something that happened, and then they got bailed out. They said, "Oh, they're too big to
right.
fail. Bail
Yeah,
them out."
they came out okay.
Yeah,
None of
they
those
came
banks
out
closed.
pretty good. Yeah, they came out okay. Yeah, so Bitcoin, cryptocurrency. We don't talk about cryptocurrency too often on the show, but we kind of felt with all the things going on now, it was a good time to maybe address some of these things. And moving forward, if there are any subjects you'd like to hear about, I mean, the DeFi Collective at gmail.com, let us know. And subscribe to us on YouTube. Let's Talk Radio with a Y, RADYO, or the DeFi Collective. And we will certainly respond, but we cover a lot of different subjects, and we will continue because this is kind of where we're going. And we kind of know that if you look at the trend lines, this is kind of where we're going. So what we try to do is stay on top of it so we can help you stay on top of it. And with that, I will say, Alex, do you have any closing thoughts?
No.
Yeah.
Web3 is a battleground for neutrality. So just like the first internet or the old internet. So either you own it or Walmart does. So you better get in there.
Yeah, you better get in there. Yeah. Okay, well, I will say in closing, wear your mask, and we'll see you next week. All right. Have a good one.
Bye, guys.